India pulled out all the stops in its charm offensive at the recent EU-India Business Summit. Prime Minister Manmohan Singh emphasised his country's investor-friendly policies as he asked top European business leaders to invest, particularly in infrastructure projects.
India-EU economic and trade ties will not only be to our mutual benefit, but will also be a powerful stabilising force for the evolving global economy. India is on the move, and I invite you to be active partner in the processes of change and development now underway in our country.
The European Union is already India's largest trading partner, with bilateral trade reaching $76 billion last year. Yet companies here have been slow in offshoring their production to India.
French companies have been outsourcing. If you look at classic example is Airbus. They're able to outsource its technology, components, different geographies within continent Europe itself. But they have not been offshoring. Offshoring means going to the shores of India and taking some of the mission-critical application and have the Indian companies try to solve that.
Not so for Indian companies like Bharat Forge, which are actively pursuing acquisitions in the EU. With 6 production plants and 2,000 employees in the region, this components maker plans to generate 40% of its business from the EU market.
The areas that we are focusing on is energy, both conventional and renewable, railways, locomotives, marine, ships, and capital goods. Again, a large part of this has tremendous opportunities in EU.
And companies like Dassault Systèmes are beginning to see the opportunities in India. 25% of its R&D staff are based in India, and the European software firm has set up 4 development centres in the country, attracted by the young, dynamic workforce.
What we see in EU as well in United States, we see the workforce that is aging. And so those guys have very, very good know-how, but we need to transmit this know-how to a workforce which is much more younger. And I think we find in India a workforce of young engineers that are very highly skilled, and that are very capable not only to help developing the Indian market, but also the worldwide market.
With India relatively unaffected by the recent crisis on Wall Street, Indian Commerce Minister Kamal Nath used the opportunity to call for a new financial world order.
With the integration of the global economy in the last 10 years, no crisis, financial crisis, is limited to a country alone. It becomes a global issue. And that is why this needs to be addressed, not just domestically in the United States, not just domestically within one country, but there has to be a new financial order. There has to be some common rules of the game for financial institutions, for banks, which apply to all countries, which all countries must comply with. Otherwise, you will see this happening all over again, and we are addressing the symptoms.
In these times of global uncertainty, most countries are counting their friends. The EU and India recognise each other as long-term economic allies. The EU appreciates India's financial stability, and India would like the EU as an alternative market to the United States. Both sides are now negotiating a free trade agreement that is expected in 2009.
We want to have tariffs being lowered. We want to have services more open, and we want to have some questions linked with investment being facilitated, such as intellectual property, patents, and these kind of things.
You will see many more companies from India investing here. You will see the reciprocity, and you will see the trade links becoming much stronger.
Reducing trade barriers sounds like a good idea in a world facing recession. And if India and the EU double their bilateral trade to $140 billion in the next 5 years as planned, this is one relationship that could cheer investors from Reykjavik to Bangalore.